Hello everyone, and thank you for joining us for today's AIX virtual webinar, during which we will examine the outlook for commercial aviation, and more specifically, the interiors market. My name is Andrew Doyle, and I'm Senior Director for Market Development at aviation data and analytics solutions provider Cerium. We're delighted to have been invited by our sister company, RX, organizer of Aircraft Interiors Expo, to host today's expert presentations and panel discussion with senior industry representatives. We have a lot to pack in today, so I'll keep my opening comments brief. We're all acutely aware of the impact the pandemic is having on our industry, but the big questions are, where are we on the road to recovery, and what fundamental changes are likely to result for the interiors sector? My colleague, Rob Morris, Global Head of Consultancy at Ascend by Cerium, will be first to take the virtual stage with his latest commercial aviation outlook. Gary Weissel, Managing Officer at Tronos Aviation Consulting, will then cover the outlook for aircraft interiors. Our presenters will then be joined by Beth de Young, VP Business Development Aircraft Interiors for lease customers at Safran, and Harold Mehring, Chief Customer Officer at Deal Aviation, for a panel discussion during which we will delve deeper into some of the key issues facing the interiors sector. So without further ado, over to you, Rob.
Thank you, Andrew. Hello, everybody. So over the next 15 minutes or so, I'm going to use some slides that hopefully can tee up our conversation. I'm going to look at the commercial aviation outlook and ask the question, is the landscape changed forever? I would like to make one point before I dive into the presentation. This was recorded on the 1st of September with no studio audience. So there are some time critical data sets in here. So if the data is slightly out of date, please forgive me for that. So I'm going to look at three things over that period. First of all, I'm going to take a current market status check. We all know that COVID-19 has exerted a fundamental impact on the demand dynamic in the commercial aviation space. We all know that last year we lost 2/3 of demand compared to 2019. But where are we today? A few slides that just examine that from Cerium data. Then the recovery outlook, more importantly, where are we going? How are things today? And what are our projections for the future? Before I take a longer term perspective and try and explain our view on demand for aircraft and forecast deliveries over the next 10 and 20 years. So if I first of all look at our Cerium schedules data set, we can explain that if I look at the gold line, 2021 year to date, our schedule to the end of September, I typically only look about 4 or 5 weeks ahead because the schedule becomes a little bit less reliable beyond that. But we expect to see around 50% reduction over 2019. Now that's about the same kind of number. Actually, we ended last year at 52% down over 2019. So capacity is expecting to be around where it were last year still. IATA are predicting that around 47% reduction in capacity for 2019. That's effectively the same as their 21% growth over 2020. Actually, our schedule, if I go to December, having made my comment about instability, indicates around 43%. So there's a little bit of upside perhaps in the schedule as filed today compared to what IATA and other forecasters are predicting. And here's why. If I look at the change now on a year over 2019 basis, on a daily basis, we can see that towards the back end of this chart, i.e. through the summer, we are seeing capacity declining slightly less. Actually, when I get to the end of September, capacity on a 7-day rolling average will be around 40% or so down over 2019. So the outlook, if you like, is for improvement. I'll talk a bit more about that actually when I come to the second section of the presentation, where I look at some numbers that IATA have just very recently, in fact today, published. Another way of looking at a supply side metric is our tracking data. So our global aircraft track daily data, and this is just a global number as opposed to regional numbers, and the regions show some significant differences. We can see how many aircraft are tracked every day. And as of actually the 27th of August, which is the last Friday I have data for, and I tend to report Friday to Friday, we had nearly 11,700 single aisle aircraft tracked. That compares to 14,000 aircraft on the 3rd of January 2020, our datum point for 2020. the first Friday of the year. Actually, we were about as high though this year, on last Friday as we have ever been since the pandemic started. So positive trend. You'll note at the back end of that a slight downward turn. That's a backward step in China showing up in the data. That's effectively cases in Shanghai and Nanjing causing local lockdowns, which resulted in China tracked aircraft declining fundamentally. That illustrates the volatility or the risk in the recovery we have right now. We're in a kind of 2 steps forward, 1 step back, 2 steps backwards, 1 step forward type of scenario right now. And it's really hard, therefore, to predict accurately where we are going in the long term. If I then change gears and move to our fleet data, we can see that the passenger jets in store that we know were above 14,000, this is single aisle and twin aisle aircraft only, at the peak of the pandemic, are reducing significantly and are now down to around 5,200 or so in store as of actually Monday the 30th, sorry, Monday the 29th of August. We expect that fleet to continue to decline a little bit more, but as we go towards the winter timetable, we might expect it to see an increase as well after that. And actually, in our scenarios I'll talk about later, we predict there to be around 6,000 idle aircraft, parked aircraft at the end of this year. So the downward trend I projected on this line here, we might expect to see that increase somewhat as we head into the winter season. Of course, with lots of surplus of aircraft, there must be a lot of retirements, mustn't there be? Well, actually, the reality is not that. At the present time, despite there being those 5,000 plus aircraft parked, 2021's retirements are lagging last year's, and last year's lagged to 2019. So less than 200 aircraft currently recorded as retired this year. The part-out market is fundamentally slow, which means there's limited used serviceable material, including in some cases, I've heard from lessors, cabin material, which they need for refurbishment. We would expect that to increase, and we would expect to see in 2022, as demand for used material recovers, more part outs. What we are seeing though is increasing numbers of new shipments. Deliveries have increased through the last few months. June and July were as high as they've been aside from December last year. And as we move into August and September, we'll expect to see even more deliveries. The deliveries this year are fundamentally higher than last year, which of course were fundamentally lower than 2019. I'll talk a bit more about that when I come to my next slide with annual forecast. A couple of points to make though. Boeing are still retaining a significant number of pre-built 737 MAXes, including more than 100 for China. Less than 10 whitetails have been repurposed. That does create opportunity because these aircraft have been built for certain customers, and the cabins and the interiors may need reconfiguring for new customers. They also have a significant number of 787s which have been flown but not delivered. So inventory is going to be high at OEMs for a while yet, and specifically at Boeing. So my last slide in where we are for today effectively is a small amount of forecast before I go to my long-term forecast later on. Our Cerium fleet forecast, which is consistent with scenario 4, I'll explain what that means in a moment, projects OEM rate increases in 2024 and 2025. We expect to effectively see stability in output through this year, next year, and the year after, before we see rate increases in the years after. Now, Airbus particularly, but Boeing also are talking about rate increases beyond those that I'm projecting here. We can debate those later, but also I can talk a bit more about what that means as I move to my next section, which is the global recovery outlook. Where are we going? What is the numbers that I've just shown you telling us for our projections over the next year or two? So at Ascend by Cerium, as this COVID pandemic kicked off early last year, we started to think about how we were going to forecast moving forward. And in fact, we decided to set aside the word forecast and start to work with scenario projections instead. So we set up a number of scenarios, snappily named after numbers. So we're at scenario 4 and scenario 5. We modeled these scenarios back in September last year, September 2020. And we set up a number of drivers. I'm not going to walk through these drivers in detail, but I'm going to talk about the highlights particularly, because the very first bullet in this table is about the demand recovery to 2019 levels. That's the outcome of the scenario, if you like. And our scenario 4 predicts effectively globally recovery in early 2025, but it's not synchronous. I'll explain the regions in a minute. Scenario 5 is an upside. Scenario 5 diverges from Scenario 4 as we head towards later this year and early into next year, sees stronger recovery. Demand rebounds more quickly, as explained in the airline environment, based upon wider vaccine rollout, driven by pent-up leisure demand and business travel recovery. Scenario 4, a little bit more about the vaccine status, because we expected vaccines to become widely available by mid-2021, despite what all the scientists were telling us last year about the time it would take to develop vaccines. My next slide explains the pace of that there. We do, though, expect unilateral border restrictions to continue to remain in place, and that is the biggest challenge of all. Even though we are seeing vaccines becoming widely available and quite highly effective, even as we're discovering in the UK against Delta variant potentially, unilateral border restrictions are the biggest frustration to travel demand. Thus, there will be a slow demand return, led by domestic markets with international coming later, and a large fleet surplus. I spoke a little bit about vaccines. This is outside of Cerium's data expertise, but I use our world in data to explain the number of individuals with first doses in each of these countries. Apologies for the chart being so busy, but several important points to make. There are many nations now where first vaccine status, and indeed second vaccine status, exceeds 70%. You can see those, the UK, the EU, the US heading up to 60% for first vaccine status. This data dates very quickly. But there are many nations, Australia, Mexico, India, South Africa, Japan, which are struggling to get beyond 50% right now. This is what is going to frustrate travel demand recovery for some time, is the pace of vaccination. We need to find some kind of global program that allows us all to become vaccinated, which is going to be the ultimate key to unlocking the door. In the meantime, what do the scenarios mean in traffic terms? So we plotted on here our scenarios and IATA's global RPKs on an annualized basis compared to 2019. So you can see that even in our recovery that I showed earlier, where aircraft tracked is close to the highest it's been since the pandemic started, we still see global traffic being something like only 40% of what it were in 2019, recovering to maybe 60% in 2022, depending upon the scenario, and 80% in 2023. Those are important numbers to bear in mind. Here's my asynchronous recovery by region. So you can see that in scenario 4, the baseline, whilst we recover in global terms by August 2024 to 2019 levels, actually we see recovery more quickly in China, where we know the domestic market, aside from what happened in August, got back to where it were in 2019 in June and July. We see Asia Pacific actually being somewhat slow to recover. If I showed you my tracking data on a regional basis, Asia Pacific, excluding China, is the region that is struggling to recover because of the pace of vaccination I spoke about earlier. If I then move on to why have I talked about scenario 4 being our baseline, and this is an interesting chart simply for the piece that looks at July 2021. IATA published their July 2021 traffic data earlier today on the 1st of September. And up until June, our scenario 4, which is effectively the red boxes here, or the pink line for year-on-year change, was tracking very closely to the solid line, which is the monthly global revenue passenger kilometers number, or the dotted solid line, the year over 2019 change. However, I will make a point about July. In July, we've seen a slight divergence. The numbers published today indicate that a 53% reduction in traffic in July over 2019. That is a 7-point improvement on June, and actually a 7-point improvement on our July 21 projection. So we seem to be heading perhaps away from our baseline towards our more optimistic scenario 5, which even exceeding our optimistic scenario for now. However, August data is uncertain because of the backward steps in Delta. Delta variant is inducing US demand, measured through by TSA, Transportation Security Administration, throughput is down around 18% since the start of August. It's around 26% down over 2019 traffic. Capacity in the US is down around 5%. Supply has not yet corrected. So we're waiting to see what US traffic for August, and also Chinese traffic for August does, and we may see these optimistic lines reverting back towards our scenarios. The jury's out on that. We'll have to wait another 4 weeks. What does that mean, though, in fleet terms? I've talked about the demand and I've talked about the supply, but what about fleet terms? So we use a number of assumptions within our scenario modeling to estimate the fleet we expect to be in service as a consequence of that demand and supply. And effectively, those are the red line for scenario 4 and the green line for scenario 5. You can see that actually the actuals, the bars, are moving slightly ahead of that. Now, that could be because our projections are slightly off, but as I showed you in June, we were pretty close, but the fleet is still significantly greater. In July, we've got that traffic divergence. But actually, there are some utilization hypotheses in here as well, the aircraft hours flown per year or per day. And in those numbers, we are seeing still a lag. We still see globally around a 15 to 20% decline in utilization over December 2019 levels. So for now, we are seeing less efficient aircraft in the system, which is why the fleet is slightly bigger. So that's the global recovery outlook. The final few slides are going to consider the longer term perspective before I hand over to Gary to talk through his view on the outlook. So when we were looking at the impact of traffic last year, setting up what was now our 2020 Cerium fleet forecast, we sat around, several of us in the team, and debated what we thought about traffic in the long term. What do we know about the projections we've shown you? That's our scenario 4, which takes us through to 2025. But what do we know about beyond 2025? Do we see a strong recovery in demand, a bounce back, or do we see a reversion to trend? And in the end, we decided that we couldn't see any logical argument or evidence yet for a strong bounce back. So we modeled reversion to trend. We effectively took our forecast from 2019, moved it back 5 years, and you end up with 5 to 6 years worth of lost growth, the red line compared to the teal colored line. So an overall 20% demand reduction in 2038. Obviously, as we move through the recovery, we may see rationale to change that, but for now, that's our perhaps somewhat pragmatic as opposed to pessimistic view. What has COVID-19 done to our long-term delivery forecast? So I've simply decided to plot our 20-year forecast annually since 2015. And having been forecasting for many, many, many years, more years than I care to mention, and often getting forecasts more wrong than I get right, I simply recognize that each year when we increment a 20-year forecast, we take out at the start a small year, we put in at the back end a big year. We'd expect the forecast to grow every year if it's a trended forecast, as these are. And indeed, that's what we saw. Although that growth slowed a little bit in 2019 as we made some different fleet mix assumptions. But overall, for the 2020 forecast, given my 20% loss of demand growth, we actually see an 8% loss of supply in terms of aircraft forecast deliveries. That's because we have some systematic inefficiencies throughout the early part of the forecast, which we've not corrected initially, some of the utilization points I talked about. So overall, for now, we're seeing a decline of around 8% in demand over our view from last year. My last but one slide in data terms. However, in 10 years, we still therefore see around 15,300 new passenger jet deliveries from Airbus and Boeing alone. I didn't include regional jets, which were on the previous slide. I didn't include other OEMs. I didn't include uncertain deliveries as a consequence of program changes. So we still see around 15,300, around 1,500 effectively new deliveries per annum through 2030, through the next 10 years. One final point, I've talked a lot about demand and new aircraft. I want to talk about the used market very quickly because obviously we're going to talk later about cabin refurbishment opportunity. And demand for cabin refurbishment arises not just from new aircraft, but from aircraft transitions. If we look back over the historical past, I started in January 2010, so the last cycle effectively, we can see that on average, around 30, this is a rolling 12-month average there, of aircraft that have transitioned into new leases, and around 30 or so aircraft are transitioning every month. So around 360 single-aisle aircraft transitions every year, and around around 5 or so around 60 or so wide-body transitions every year. We can see at the right-hand end of this chart that transition level declined significantly as a consequence of COVID, unsurprisingly. Physically, it was hard to transition. No demand existed or limited demand existed. But let's also move very quickly to recorrect that. And if you look at the dotted line, which is effectively the monthly transitions, we can see that the peak we would see in June every year, there's a spike in June every year, which is effectively the peak of new leases, which airlines wish to align with start of summer season. The peak in 2021 is as high as it's been through the last bull cycle, aside from in 2019. Lessors have become very effective again at placing aircraft into new leases. So we should be confident there will be recovering demand for cabin refurbishment from lease transitions as we move through the recovery. So thank you for sticking with the presentation that tees up this debate, hopefully. Very quickly, my summary: demand outlook is uncertain. That's just a statement of the obvious. The current indicators are largely signaling positive trends, but recent cases in China and a surge in US and Europe is causing some near-term concern. We should be prepared for one step forward, one step back for some time to come. Scenario 4 represents a base case recovery scenario for now, indicating global return to 2019 demand in 2024. There will be a surplus of aircraft and eventually increased retirements, but the long-term outlook remains strong, resulting in 15,000 or more new passenger jet deliveries over the next 10 years. And if actually scenario 4 does prove to be pessimistic, as per my comments about the July traffic numbers, then we could see upside in that. And there will be interior refurbishment demand recovering as the pace of used aircraft recovers also. So thank you very much for listening to the presentation. I will stop sharing now and hand you back to Andrew for the next presentation. Andrew, back to you, and thank you.
Thanks, Rob. Fascinating stuff. And we look forward to speaking with you again later during the panel discussion. But first, I'll invite Gary to take us through his interiors outlook. Thank you, Gary.
All right. Thank you, Andrew. And thank you, Rob. So I'm going to share my screen as well. So we should be good there. I'm going to delve in a little bit deeper into just looking at the interiors market. I think from an outlook, fleet size, recovery, somewhat very aligned with, with the forecast that we do in cooperation with our partners over at Aerodynamic and Alton Aviation, align very well with Rob's in the long term. So let me... sorry, I need to get my right screens up here. Okay. So next, a little bit about us. We really focus on interiors and interior management consulting and have been doing an interiors forecast now for about 7 years. Starting a little bit with what we're seeing in 2021 and the cabin retrofit status compared to last year, we have started to see some activity slowly coming back, and that's really a restarting of programs that were moving prior to the pandemic hitting in early or in mid, I guess, after end of the first quarter of 2020. So there was, United was still moving forward with some Polaris upgrades. American was moving forward with some fleet consolidation. It's been kind of hit and miss. We actually were just awarded a project with an airline that's going to be doing a fleet retrofit here. It's the first one that we've done in over a year. So we're starting to slowly see it come back on. The suppliers are still significantly down from where we were pre-pandemic, as we ended up predicting kind of once a vaccine was developed. Last year we were talking a lot about the clean, healthy cabin. We don't anticipate that, we've seen that kind of really start to tail off. There was this big push last year, even into, mid this year, on kind of the temporary passenger to cargo mods, where there's still a lot of airplanes flying around with the temporary mods with the cabin removed. Or partial cabins removed, and there were some new ones that even came on the last 3 to 4 months. Those are actually operating under temporary cargo exemptions from the regulators. They were already extended. They're set to expire at the end of December, but we actually expect them to get extended again. So we may still be seeing passenger aircraft being used as cargo aircraft on the main deck for some period of time as we continue through the recovery period. And then there's this huge thing. I get asked a lot about the passenger to freighter market. We're heavily involved in that on our asset management. On our asset management services to a number of clients. We're managing multiple freighter conversions. There is some interior involved in that, but it's relatively insignificant when it comes to the kind of the overall volume of interior work and with our interior forecast. So these again are a little bit dated, even from what Rob had, but there was business confidence. I just kind of wanted to show from April to July. I think, Rob even showed it. I have another slide out of here, my next slide from IATA as well, showing some of the recovery over the summer. Really, there were improving airline financials, at least in the US. I think there's a lot of concern now on what's going to happen with the fourth wave and how this fourth wave, this Delta wave, are going to affect things. We are starting to see significant schedule cutbacks, which I know Rob already talked about. I'll touch on in a second. Looking at kind of the international markets are still weighed significantly down. Again, this is IATA's information from the end of June, and Rob showed some stuff in July, which had shown the recovery through the summer, which is sort of what we expected. But then when the fourth wave hit, or Delta, however you want to call it, we're starting to see, the airlines revising their Q3 and Q4 revenue forecast downward. The last several weeks, China's dropped domestic capacity by about 30%. U.S. load factors are falling. Intra-Europe capacity cuts are forecast to continue to rise through October. Now, some of that is the end of the holiday season and shifting into kind of the business travel, which is still way down. But as you can see, kind of up through June, when you look at the domestic markets, China and Russia were up over, their January 2020 indices. The U.S. was back to about 70%. Brazil was up. Japan and India are still way down. So again, as Rob said, you put a forecast out today, and or he alluded to, you put a forecast out today, things change next week, and your forecast changes. So it's really difficult to forecast over this period. We were looking at really just a 5-year forecast. So moving now into kind of the, what's driving the interior market, it really is the fleet size is kind of the baseline. So this is looking at regional jets and larger. This doesn't include turboprops. This is, commercial air transport aircraft. The 2021 fleet size is still only about 70%. The gray line there is the pre-COVID forecast that we had in 2019, and even through 2025, the operating fleet size we're still showing down kind of 25% lower than the pre-pandemic forecast. We are starting the forecast that we put together with our partners sort of shows the beginning of the recovery, which we pushed out now until late 2024, kind of late 2024 into 2025, which I think actually aligns pretty well with what Rob was showing. When we look at major interior component spend for retrofit, and so this is our 5-year forecast for retrofit only. So that retrofit is, we've included kind of the major components here: seats, soft goods, lavatories, on the right-hand side. And this is the actual spend. And what this spend is for retrofit, what we mean by retrofit is a complete move and replace. So this isn't kind of MRO, repair and overhaul. This is a complete, we want to, retrofit our cabin and put new seats on. We want to put new IFE on. We want to change the galleys out, and that's what we mean by spend in retrofit, which has shifted. I don't have MRO numbers in here, but because of the fleet size, there's so little retrofit work going on. The MRO numbers are much larger, actually, over the next 5 years or so than the actual retrofit numbers are. But we're still looking at about a 50% drop in the total spend over the 2021 to 2025 timeframe from what we had pre-pandemic. It's about 18 billion all in is what we're forecasting, and that was down from our pre-pandemic forecast, which was about 38 billion. If you go back and look at what we were presenting in 2019. The pandemic impacts are really expected to be much longer term. A lot of it's driven by largely by the wide body lack of demand and fleet size reductions and reduction in new deliveries of wide body. Wide bodies take up, when you look at the cost of a wide body interior versus the cost of a narrow body interior. Now, granted, it changes by the airline and everything else, but just due to volume, complexity, cost of first class seats, international first class seats versus a domestic business class seat, it averages 6 to 7 times the cost per wide body of spend, let's say, on an interior, and that includes in retrofit. So we're anticipating a recovery by about 2025. We do expect there to be a spike around the 2025, 2026 timeframe. And that's really going to be pent-up demand that'll drive a resurgence of retrofit work. It's not a huge bump. It really depends on the, the type of product, where we see some bumps a little bit higher than others. But, we still don't see us getting back to the 2019 levels of spend, even within this 5-year forecast. The actual split and breakdown by product type for retrofits really hasn't changed much over the either pre-pandemic or what we're currently seeing in the pandemic. Just kind of everything has shrunk. You're still looking at seats being the largest amount of the spend at about 33%, followed by IFE, and then kind of soft goods, lavatories, galleys, and everything else baked in there. Looking at the new fleet delivery forecast, very much in line with what Rob has, which is really a reduction in Boeing and Airbus production rates. We're looking at about 7,300 new deliveries over the next 5 years. So that aligns with Rob showing 10 years and about 15,000 aircraft over 10 years. We do have the MAX production back online. Airbus is talking about production increases. Again, I think a lot of that is still predicated on what happens with the fourth wave of COVID, and how long does this last, and do we see the discussions about production increases hold back a little bit? We're not sure. And then, looking at the reduction for cabin line fit spend, again, this is down about 60% from our 2019 forecast numbers. Again, really driven by the reduction in production rates and delivery rates at Boeing and Airbus. There are higher reduction in expectations of lower wide body deliveries. Again, further hits the interior market. So kind of overall, we're down pretty significantly. We are up a little bit from our 2020 numbers. The blue is 2020, the green is 2025. I think overall it's about 3% growth from our 2020 numbers, and I think that's just due to really now looking at a 2024, 2025 delivery forecast and some of the indications that Boeing and Airbus have in there and wanting to increase production rates. Again, I take that with a grain of salt, just depending on what happens with the pandemic. I think overall we're looking, when you add these numbers up in 2021, we're looking at about $16 billion in component spend on new delivery aircraft over the next 5 years. So with that, I will let me get my screen back up here, and I will hand it back over to Andrew. We can start taking some questions.
Thanks very much indeed, Gary. Plenty of food for thought there. So now it's time for our panel discussion. So I'll ask Rob to rejoin and also invite Beth and Harold to come in on the discussion. So Beth, if I could start with you. So we've just heard about the steady reduction in the stored passenger jet fleet that has occurred since February. So to what extent has this helped your leasing company customers, and are you seeing many of these returning aircraft actually transitioning to new operators?
Yes, actually, last year there was very little interaction with the lessors' focus on renegotiating lease terms, deferrals, etc. But toward the end of 2020 and into 2021, there was more requests coming in for support on moving aircraft. And particularly the demand in the North America and China areas where the domestic travel was coming back. And a couple of indicators of that was, for example, our lavatory oxygen systems. There's an Air AD directive saying that on older airplanes, you must have oxygen in your lavatory. And when those aircraft start moving into North America, we have some supplemental type certificate solutions for that, so that those aircraft that weren't outfitted at OEM time, and the demand for that went up tremendously because of the amount of aircraft moving into the domestic US. Other things like galley reconfigurations became actually orders for service bulletins and kits, and a lot of urgency in terms of delivery. So those were real indicators that things had changed. but particularly of narrow bodies moving into the US market. And there's some support that we were doing with China as well.
So, I mean, are there still challenges around cross-border transfers of aircraft? You highlighted there that requirement for the oxygen in the lavatories. I mean, is that an isolated example, or is it a broader issue at the moment?
Well, it's just to bring, when you move from jurisdiction to jurisdiction with an aircraft, there's documentation as well as operational requirements. And it's easier in times where it's not as hard to place aircrafts to keep them closer to the jurisdiction that they were in, instead of moving something, say, from Europe to the US or from South America. So it's just more work to get the aircraft placed, and more demand on companies like ours to help provide documentation, products, things quickly to allow that to happen.
And also just around the used leases increasing in line with demand recovery. Do you see that yourself? Do you agree with that view?
We're getting more interest. Definitely, there's quite a bit more quoting activity, campaign support of the lessors, but really isolated to the single aisle. On the wide body, there's some activity, but mostly speculative reconfigurations that could possibly be placed with other airlines, but not a secure customer that aircraft is actually going to. So I would say definitely a lot more in the single aisle area.
Okay, I'd like to move over to Harold now and get some of his views around these topics. So Harold, would you say, is it time to be cautiously optimistic now about the rate at which the stored fleet is decreasing? And to what extent do you think that this will drive demand for refurbishments?
Okay, first of all, thank you very much, Rob and Gary, for that brilliant data. So that helps us a lot. So coming back to retrofit business and modification business. So our company is very much in line fit aircraft. So I have a question on that point, especially to Rob. So in our assumptions, we are very much close to what you showed. So travel coming back in 2024 to 2025 with the RPKs. And deliveries also will be back on the level of 2019 in around 2024 to 2025 by number. But when we look at the mix, so we have a change in mix. So what we see and what we expect is that we have a decrease in delivery of twin aisle aircraft, around 40 to 45% less twin aisle aircraft, and this will really affect our outfitting business in the especially also in the cabin. So would you agree on that we see that shift to more single aisle aircraft?
Yeah, Harold. Hi, I think we do agree. I mean, if I think about where we were pre-pandemic with wide body production rates, I think we now know that they were structurally perhaps too high. You know, the days of 787 rate 14 or even 350, well 330, you know, up at 8-10 a month, 350 heading towards double digit per month, was structurally too high for the demand, and that created a surplus. And we also, by the way, are appraisers as well as part of Cerium, we're appraisers, and we noted weakness in asset values because there was a surplus of aircraft in the market. So ally that to the fact that we have single aisle aircraft with greater range and payload potential than we used to have, the 321 Neo I'm thinking about particularly, but also to some extent the MAX 9. I think we may see more single aisle, which of course in interior terms are more commoditized than we would have seen previously. So yeah, I think we agree with you. I also do think there's a bit of upside. I mean, my comments about the July numbers, if you know, we have Airbus talking about potentially single aisle rate beginning with a 7. I think, you know, when we do the numbers and crunch the numbers and think about what demand needs to do to justify those aircraft, we see perhaps an accelerated replacement cycle as some of the ESG arguments push for more new aircraft, more fuel efficient aircraft, that could justify higher rates. So I think, when people say, when Airbus talk about high rates, they're structurally unsupportable in the single aisle. I think that's not the case. I think there is potential for optimism and upside there.
Okay.
So Harold,
Thank
maybe
you.
we could just
coming back to that.
Sorry, you go ahead, Harold. Please
I just want to reflect on the retrofit business. So the retrofit business or modification business is very much depending of are the airlines making money again? So, and we see that it will start. So last quarter this year will already go better. So we see positive cash flows or even profitable business for major airlines beginning next year or starting next year and having really recovered when it comes to profit and cash next year. So they have money to spend either for new aircraft or to do retrofits. And we think there will really a big potential for doing retrofit business. So looking at that parked fleet you mentioned, Rob, I think there's a high potential that these aircraft will not going to retirement, but they will kept in service and a lot of them will become retrofitted, especially the wide bodies.
Okay, so just digging into that issue of the wide bodies a little bit further, Harold, obviously Gary talked about a fit out for a wide body being worth 6 to 7 times the narrow body equivalent in terms of the value or the cost of that cabin. So fewer wide body deliveries is going to mean some significant structural changes for the interiors supply chain, would you say?
Yeah, I fully agree. So that's mainly, of course, what we saw. It's seats and IFE, but of course, it's then all the rest. It's galleys and lavatories have to be shifted. If they do change in the layout, they change from a 3 to 2 class layout or put in premium eco, which is the trend today. So yeah, fully agree on that.
Gary, did you want to make any comments about the implications for the interior sector of the slowdown in wide body deliveries?
Yeah, well, I think, again, when you look at retrofit, I mean, you look at it as both kind of the new delivery where you're doing an entire cabin and the retrofit where you could be doing anything from just a soft goods change up to an entire cabin, right? Just depending on the volume of the mod. So when you look at the slowdown in new delivery, obviously is just going to shrink the total wide body fleet that's out there on the market. That in turn, slows down years out the potential for the retrofit. I tend to agree with Rob, and I think I was going back and look at some of the 2019 numbers I had where, the wide body deliveries are down. The wide body fleet size is going to be down. And I think international travel, I think it's going to take longer to come back. Just looking at the Bloomberg came out last week with just some analysis on the financials, at least for the U.S. airlines, and they were down significantly. They were reducing their Q3 and Q4 forecasts for financials. The airlines were starting to come back and make money, and come out of the red. But I think just the volumes of the profits, because the volumes of the fleet and the volume of the flying public is so much smaller that, they're back in the black, but they're not back in the black where they were in 2018, 2019. So I still see that, the vast majority of, let's say, the large spend retrofit work, huge fleet retrofits is still, several years out before we start to see recovery. I do think that the reduction in wide body is, that's one of the big drivers, I think, in our forecast that hits it.
Rob, would you like to comment further on that? I think you're muted, Rob.
Schoolboy error 2021. I think there's one point to make there, which is that the smart airlines, whilst they're seeing a bit of a volatility in demand, are starting to position for the future. So I'm thinking about the moves by the likes of Delta, who have moved to acquire their A350s and the 737-900s. They see an opportunity to not just acquire new aircraft, because, by the way, Delta are the airline that have taken delivery of most most brand new commercial aircraft since July last year. But Delta are also looking to take used aircraft, which will need reconfiguring to their cabins as they see opportunity. I think others will move similarly. So already we're seeing airlines position for the recovery in the medium term whilst dealing with volatility. I think that drives optimism for demand.
Thanks, Rob. Okay, let's move on to the leasing sector again. Beth, there's a lot of discussion in the industry about the trend towards the leasing sector increasing its share of the market, and that's partly as a result of the appetite for sale leasebacks. So what are the implications of that for interiors suppliers, would you say? Is it changing the types of products that are going onto these aircraft because a greater proportion of them are going to leasing companies, or does that not have an impact? What would you say about that?
There is definitely a shift, and its sale leasebacks certainly were significant last year and continue this year in terms of airlines that have unencumbered young aircraft raising some operating capital. But the other thing that happened is that a large number of the aircraft deliveries off the production line, depending on the aircraft type, up to 70 and even a few cases, 100% of the airplanes were funded by lessors, which means that ownership is shifting to the lessors. And that has long-term implications in the entire ecosystem because the aftermarket, the MROs, will be dealing with aircraft unless they're traded out later, owned by the lessors. And it's not just a incremental shift like we've seen in past years of a couple of percentage points. In 2020, June 2020, 46% of the aircraft were owned by lessors, and now it's over 50%, and it's expected to, on a sustained basis, hit the 60% range. What are the potential impacts of that? Well, certainly standardization is something that the lessors like because it makes it easy to move aircraft, but they also need to be able to accommodate the branding. So more modular interior configurations will become more and more important. Things like our MaxFlex galley, which can be reconfigured very easily, very quickly to go to a new operator, will become even more important. So I don't see it being standard interiors. There has to be some differentiation for both the airlines and the lessors competing, but it will impact the OEM as well as retrofit.
And could I invite Harold to comment on that question as well? Is it changing the types of products that customers are asking for as that proportion of leased aircraft increases?
I mean, looking at leased aircraft, it's mainly the documentation you have to check. So it's the MRO, the documentation, especially when it's an aircraft with a lot of STCs. And mainly, and I was in the seating business, it's the seats. The seats are of major interest when it comes to lease transitions from one airline to the other. So as we are not in the leasing business, so we are not that much touched with our product portfolio for the leasing business. What I can say, especially looking at single-aisle aircraft, there's still the need for more densification. Although we have the pandemic, the COVID-19, there is still a big trend to have a densification in aircraft. So we have, like Safran, we have also products in the aft complex of the aircraft to combine the lavatory and the galley and gain a space for another row. So meaning 6 paying passengers. So this is still a trend.
Okay. I'm just conscious we have a few minutes left. I'd stay with you, Harold, just to ask you about the issue of increasing production rates, particularly looking at Airbus for 2024, 2025, and the single aisle aircraft. Are these increased production rates something that the supply chain and the interior supply chain is both willing and able to support? There have been some questions around whether the market can sustain these higher production rates, and they're asking the supply chain to invest. in these increasing production rates. Is that something that you can support?
Yeah, it's critical, I would say. Yes. For us as a first year, we really could adapt very good to the situation. So we took capacity out. We flowed it down to our supply chain. So we cut our capacity now by roughly, when it comes to really headcount, by up to 30%. So this is the level we would expect to have capacity-wise for 2022, 2023. So we already foresaw that there will be a ramp up. So what is more critical are the tiers which are tier 2, tier 3, tier 4. So we are dealing with suppliers. They have a portion of 10 to 20% in aviation. And they do, for example, especially in the interior, they are with automotive or other industries, and they are really not willing to suffer longer from the aviation business. This is a little bit of threat which I would see.
And Beth, this is certainly something that's being discussed in the leasing community, these new build production rates. So would you like to comment?
Well, on the new build production rate, we have been at 63 aircraft a month and supported that. But Harold points out that the third and fourth tier are a concern. And the leasing companies are not convinced that the life of the aircraft is going to be supported if we continue to bring more capacity into the market. It may affect the values of aircraft, and that means it affects the investment in the aircraft. If your impaired asset is not worth as much, there'll be less willingness to invest in them. So that is certainly a factor, and we've had to make adjustments as well, but keep it flexible so that we can scale up as demand changes. A couple of other things that Harold touched on, I think is worth mentioning, is the densification of the cabins continue. Despite all the discussion last year about less dense cabins because of a COVID era, it's clear that we're going to the same density or more. And we have seats in stock for the single aisle to meet those standard high density configurations that are quick to support, because we are expecting more aircraft to come on. The other things that were talked about were a lot of health and hygiene. And what we're seeing is anything that was easily adopted into the cabin, more waste storage or storage for wipes or things like that was done, more trash compactors, etc. But anything antimicrobial, UV light, et cetera, will be adopted for the long term and not likely to be on a retrofit basis of any level of investment.
Yeah, I mean, Gary did mention, Gary did mention in his presentation that that demand for clean, healthy cabin interior products might be waning somewhat now that we have vaccines available. There's also some debate about the transmissibility of the virus from surfaces, but I know, Harold, this is something that Diehl is looking at very closely. I think you're on.
The interest is waning. We put very quick mid last year, a campaign which we call 3Q, which is called a cabin confidence concept, into the market. And firstly, there was really a hype. So it was all about touchless. It was about UVC. It was about antimicrobial surfaces. It was also about ventilation flow, all about that. So the interest was really going down, but I think we will get a new normal. So in mid or long term, we will see hygiene functions. So touchless will be state of the art. So we have that already in the airspace cabin with Airbus. It's an option. The take rate will be around 50%. But if you go at the end of the decade, I guarantee it will be 100%. So touchless is a must in the cabin. And also hygiene. I mean, we do not know when the next pandemic will come. So you never know. So I think we will see hygiene in the cabin for sure. It will be a new normal.
And Rob, just on this, sorry, yeah. I mean, there was that debate going on in the industry, of course, pre-pandemic about embedded systems versus bring your own device. You know, so in some ways, it was a trend that was maybe underway to some degree, I guess. But Rob, so I just wanted to ask you about the densification trend, because we've talked about leisure travel coming back ahead of business travel. That could impact on the mix of cabin classes in the aircraft, and then by implication the density. If you've got a bigger economy cabin, there was some refurbishments I was reading the other day about Qantas and its ongoing refurbishment of A380s is putting more premium seats in the aircraft. What do you think is going to happen in terms of the cabin splits? Will we see reduced business cabins?
Yeah, I think, Andrew, I think that we've even pre-pandemic, frankly, in the context of business travel itself, we'd seen a move back down the aircraft to premium economy, where you know, again, the revenue per square meter for the airline was the highest of any cabin, and the service offering was where many of our businesses were driving our business travel to. In the meantime, you know, one would observe when traveling there was quite a good mix of leisure in there, because people were paying slightly extra for the experience of what they thought was almost like a business type product, even though we didn't see it as that from a business perspective. So yeah, I think PE becomes more attractive. The final point is actually, I think a lot of people have been frustrated from traveling for a long time. So when they come to travel on leisure, cost is becoming less of an issue. And people will be looking more for comfort and experience, and also the sense of hygiene or safety in slightly less spacing compared to that denser at the back. So there's going to be that. On the other extreme, I think when we come to short haul travel, as Harold was alluding to, densification there is all about single class, as many seats as possible. I just saw Jet2 order A321 Neos, I think, at 242 seats, which is effectively replacing a 757, so a smaller aircraft with the same effective capacity to offer ever cheaper fares, which is one of our key decision criteria. So a mix of both, I think.
Gary, any final comments on densification?
No, I see it. There's still a ways to go on densification. I think we're going to continue to see it. The project I mentioned we were just retained on is actually densification on both a short haul and a long haul fleet for an airline. So, you know, that's still going to continue. I think what you're seeing with the, you know, we saw the shifts. I think that Rob talked about it, where, you know, the leisure travel, I think, or maybe you, Andrew, mentioned kind of the leisure travel coming back before business, and that's going to drive it as well, in terms of kind of the size of business and, you know, business class cabins and first class cabins versus others. In the end of the day, it's going to 100% be driven by the revenue mix, what an airline can charge for an economy class versus a premium economy versus business, and what's the best mix for their fleet and their route network and their target customers, and, you know, where can they make the most bang for their buck, so to speak.
Before we finish, I did just want to touch on the very important topic of sustainability. There was a focus, I think, particularly on end-of-life recycling before the pandemic, and that remains a big concern. Also, it's possible to take weight out of the cabin to reduce emissions. Harold, do you want to give us some thoughts on what the impact of the pandemic has been on those types of initiatives?
Yeah, I read an article 2 weeks ago, I think, and it was written that if we continue the consumption as we do today, it takes 3 planets as we have today. So meaning three Earths. So, and that brings up really that you have to think about it, and that we have to create a sustainable future by designing it. So we have to design products that give maximum use with a minimum environmental impact. So, and therefore, I think, especially in the cabin, weight saving is really a key issue. And it's not only talking about advanced materials. There's really easy things. And we did win last year the Crystal Cabin on a gray water reuse unit. So we reuse or recycle water from the wash table for flushing the toilet. And you can't imagine, you save 250 kg on potable water, so less water usage. And the weight of 250 kg reflects at the end, if you do it with a 787, you save 550 tons of carbon emissions per aircraft per year. And this is really an easy measure. So I think there is a lot of things, so it must not be high sophisticated.
Yeah, that's a good example. Thank you. And just very briefly, Beth, are customers willing to pay a bit more then for lightweight materials? Obviously, it requires investment from your perspective to deliver those kinds of weight savings.
I think Safran's well known in terms of our decarbonization commitment in the engine area, but it is throughout the organization. And we're hearing from the airline customers that the new equipment and new technology to meet those environmental goals are really, really important. And there's an expectation that across the board, whether it's seats or IFE, or the cabin products, that we continue reduction of weight, but also reuse of material, disposal of material. All of those areas are really high priority in our design and development. And it's a high priority for the airlines. And I believe that as all technology enhancement goes, that it'll become an expectation and will have to be worked into the competitive pricing.
Yeah. Okay. Well, unfortunately, that's all we've got time for. So I would like to extend my sincere thanks to our presenters and panelists for their insights. And we hope you enjoy the remainder of AIX Virtual. So I'm sure we all look forward to seeing everybody face to face again in Hamburg next June. So we'll see you there. So thank you very much and goodbye.